Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern U.S. time on Tuesday, the 7th of February, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, the market appears this morning to be mixed and slightly on the placement to risk. Looks like the indices are higher, but not by much. The DAX is up 42 basis points, 48 and a half points. DAX points. The laggard is crude oil this morning. The March 2017 crude's trading 52.59, lower by 42 cents or about 80 basis points. There's not much else to report other than um, a couple numbers. The U.S. trade balance came in at 44.3 billion, negative 44.3 billion, slightly better than the negative 45 billion expected. And GM reported this morning at $1.28 versus $1.14. Revenues of 43.9 billion versus 42.2. Other than that, I'm looking at what we have ahead of us today. We have the JOLTS job openings in the U.S. for December, expecting 5.569 million. The prior is 5.522, slightly lower. That comes out at 10 o'clock Eastern. Then we're looking for consumer credit at 3 p.m. Eastern for December, expecting 20.0. Currently, ECB Speaker Forbes is speaking. Not ECB, BOE Speaker Forbes is speaking. And then at 11:35 Eastern, we get ECB Speaker Weideman also speaking. Other than that, the calendar is pretty clear. Let's quickly shift gears to look at what we had yesterday. Essentially, yesterday was an inside day, trading in balance. Here's what we expected. The primary expectation was for it to push higher early on towards 2292, which is the point of control from Friday, and then to balance there pretty much the rest of the day. Same thing as we saw on Friday, just move up and hold sideways, move up and hold sideways. More consolidation, more compression towards the new all-time highs to push the 2300 through. That didn't quite work. Hypo 2 was almost on the money. An early push higher, and then the main force would be down. And I was looking for a push below the prior day's low before it popped back up and moved to the middle. Hypo 3 was the outlier. And of course, the better trade. Push higher, find the sellers around 2292 area. Look for areas to lean against, and then look for the rotation down to 2276. Not happening. So this did not work. Hypo 2 worked up to about this point here, I guess. Didn't quite breach the low. Didn't get below. This was semi okay. Tough trade still. Tough to find your spots. Hypo 1 did not work either. Here's what actually happened. So we open in an open auction, like as we expected. We look for a push higher early. We missed the point of control by 2 ticks. We pushed into the prior day's close, which was 2291, and we pushed through by 2 ticks and then rotated down. Made another attempt lower high. This is what we call corrective here, right? What I'm calling corrective. I don't know what anybody else calls it. And then we're looking for a continuation down. The opportunity yesterday for me was around this zipper here once this lower high started to break lower. The overall profile completely balanced. This looks like the old textbook histogram, first standard deviation, um, uh, uh, graph. So let me show you that. It's incredible how well organized the market is. Here's the Wikipedia page on the standard deviations. Right, this is our value area. Oop, white on white. Can't have that. This is the first standard deviation right here, right? The dark blue area. That's what we call the value area of the volume profile. The sample is the count is the amount of contracts at each price. This is the price scale right here, right? These are prices. All we're doing is we're taking this and we're rotating it and making it vertical so that it stands on its side. That's all we're doing for volume and market profiling, except volume looks at actual contracts traded, in other words, true demand and supply, versus time-based, which is market profile, and that's why I don't use it all that much except for big picture. And so that's the first standard deviation, which is value area. Second standard deviation is out here, and so on. Okay, so what we had yesterday is a market that is completely balanced, as you see. It doesn't happen all that often, but when it does, it basically tells us what does it tell us? It tells us that there is consensus on price, that the market's consolidating, balancing, coiling, concentrating, compressing, is in equilibrium, is in balance. Okay, there are a billion words for the same thing. We missed the low. We missed the low by a couple ticks as well, so a couple ticks on our target high, and a couple ticks on our target low. I was looking for the breach of the low. The gap zone was untested beneath us from Friday, from the non-farm payrolls, and we remain up here. And this morning we're trading way up here at 22.92 is where we're trading. We're trading against that point of control from a couple of days ago, from last Friday, and so we're seeing a fair amount of support here. There's a good amount of support coming into today that we need to pay attention to. The overnight high did not push all that high, 22.94. So what we've done is we've taken out the Friday high by a tick on the overnight, but you could see here from the time we opened, we went sideways in the Asian session and then straight up into the European session, and we've got this impulsive move. We're still in our pullback, and it's likely to continue higher unless something changes. There is no reason to fade this and go short early. There may be an opportunity to do so once it tests higher, but early on, I'm not looking short. The profile is double distribution. We have a distribution down at the bottom, and we have a much sharper distribution at the top. There's a lot of kurtosis here, which means there's a lot of compression. A ton of size has gone off up here, and the volume is pretty decent at 141,000 contracts. The volume's in line with what we would expect, so this is normal trading for today. So that's where we stand right now. As far as what we've accomplished so far, if we look at the profile chart, we have this island up here, okay, made up of 3 days. The point of control of which is well, what was the point of control of this? I normally memorize these because I look at them so much. There it is. This is the point of control of that island right here, right when we're trading 22.92. This is so you look at this profile right here. It's made up of these 2 days. It's made up of Friday and yesterday. You look at the profile. Let's stretch this out a little bit. You look at the profile and you see that we are right up against this high volume area from Friday. It'll be a very, very interesting. It'll be a very, very interesting morning this morning to see what it does. It's got the energy. The market's got the energy in it to do something. The point of control shifted down yesterday overall, and we have moved back into this 3 day consolidation, and we've tested and shifted down, and now we're testing back up here at 22.92. I think that it's likely to be a pretty we're likely to see some pretty good compression on the open, and we're likely to see a larger rotation moving us out of here. So let's keep this short and sweet. While we're at it, I want to make sure you remember that today at 4:30 Eastern, I'm talking about understanding price versus information risk. Um, at 4:30 today on Futures IO. Please find the invitation in the description of this video or on Twitter. It's been posted by me and Futures IO themselves. I think you'll pick a few things up about how to balance those two. Those two always exist in every trade and everything we do. It's a question of how do you best balance these for your trading style. Anyway, this morning, the ideal situation, not the one that's hopefully also the one that's most likely. The ideal situation is we get responsive down and and then look for a base and then look for this to push through, and it's likely to have some pretty good energy. This is not a good day for a swing short today, at least not one that's already on. It's likely to push higher. It's likely to push higher on the open. I'm looking for an open auction in range for us to consolidate at 92, and then I'm looking for it to continue higher and to attack the all-time high up here at 22.9650. That's hypo 1. There's a fair amount of support down here for this to happen. Okay? Now, if the support's broken, that creates a better opportunity for day traders, right? Because if the support is broken, especially as obvious as this support is, if it breaks, it's likely to push a lot of people out, causing volatility to increase, for the VIX to spike up a little bit, and for the rotation to be big enough to take us down here. Hypo 2, open auction, test, push through, fail to hold, and then move back down to 22.88, and then bounce up through, and then finish somewhere back in the 2-day range. That would be hypo 2. Okay. And then hypo 3 is exactly the scenario I talked about, is to open, push up, find the sellers, and then break through support, and then start to move away again. Very remote chance there we would be trading against the trend, against a longer time frame trend in that environment. But hey, anything is possible, and I'm prepared to take whatever trade shows up. So that's all I have for you for today. Good luck, and I'll catch you at the webinar of 4:30 p.m. Eastern today. Cheers, and watch your risk. Take care.